Hello, everyone. Oh. It's a good strategy to go over time because you don't get any questions, so I will be deploying that strategy. My name's Paul Stacey. I work at LexisNexis. I sold my company to LexisNexis about 4 years ago, so I don't really need to work, but I like working because of the problem that we're trying to solve, and I'll talk about today. How do I use this? Oh, there we go. So we've seen a few statistics from the other presenters. Essentially, the connected car is arriving. By 2025, we'll have global connectivity at 68%. That's a pretty big number. And you've got to remember, my talk today is specifically about insurance and the insurance use case. We've got a lot of usage-based insurance, UBI programs around the world, 270 active programs across 39 countries. So a lot of interest by insurers and a lot of investment in mainly aftermarket programs. And customer acceptance of UBI is actually growing rapidly. Here's some statistics here from the surveys that we do and we've been doing for the last 5 years. And we've got 60%, 76% of customers saying it's an excellent idea or a very good idea. It's not as well accepted and understood in Europe, but if you look at the key markets in the US and the UK, consumers are generally accepting of trading their personal data for a customized premium. And we see it works for society. We see that it reduces claims costs. We see that it reduces claims frequency. And we also see that it reduces casualty statistics. So why are so few consumers being offered telematics for their insurance? The penetration rates for UBI are very low, considering that motor insurance is a compulsory product. So why is this? Well, we think that there's a number of obstacles that have been overcome, like regulation and acceptance and technology. But the key things that need to be addressed is the cost of the data acquisition, the cost of the technology platform that sits, and the cost of moving legacy processes from one mode of operation to another to enable this. So I'm going to play a short video now.
There is currently an explosion in connectivity and data that is dramatically changing the way people live, work, and move. In the mobility and insurance markets, this change is rapid. Globally, by 2025, half of the world's vehicles are forecast to be connected to deliver driving data directly from the vehicle into the insurance market. Various types of driving data are collected today. Many new cars are now built with telematics connectivity, and there are a myriad of aftermarket devices and smartphone applications which collect the data for older cars. All these sources of data vary greatly from automotive brand to vehicle to device, given the many variations of engineering, hardware, and software technology used. This explosion creates an industry-wide mobility and insurance challenge we call many-to-many. With the increase of advanced driver assistance systems, telematics technology pre-built in the connected car, and the emergence of autonomous vehicles, LexisNexis, OEMs and insurers, brokers and agents are joining forces to bundle whole-life vehicle costs together and offer new mobility services appropriate for car sharing or short-term vehicle usage. To scale this, each insurer and OEM must design individual scoring methodologies and data ingestion processes. While doing so, they need to maintain compliance data sets to meet complex regulations that vary by region. They also need to integrate both their systems and the systems of the pricing and point-of-quote software houses. The result? Many hundreds of integrations and methodologies. The cost to the industry to solve this problem is prohibitive and limits consumer choice. This is why we are investing in the LexisNexis Telematics Exchange.
Okay. So essentially today we're launching the LexisNexis Telematics Exchange. It's built on our global telematics platform that's been rolled out to Europe and the US, China, Brazil, Australia. And what we're effectively doing to this platform is adding the ability for OEMs, vehicle manufacturers, to export their data to our platform so we can normalize it and we can serve it up to the insurance industry in a way that they're able to digest across the insurance continuum. You see, a many-to-many problem is one that's absolutely worth solving. We've seen a number of relationships between a single OEM and an insurer, but it's not realistic that 18 OEMs are going to have management teams to interface with upwards of 500 different insurance companies. This many-to-many problem lends itself to a data exchange, and we've seen so many precedents of this in the past with credit data, running contributory databases that solves this problem. This is the reason I stayed on, because this is a huge opportunity for OEMs to find a business case to pay for this technology as well. Insurance is a compulsory purchase. There's not many things we have to do in life that's compulsory, but buying motor insurance at the moment is one of them. And so this is a great opportunity for OEMs to create a meaningful business case that pays for this investment in this technology so we can get the penetration rates up. But it's also a lot of consumers, we're pushing against an open door. They want it. They want to prove to the insurer that they should not be judged based on their postcode or based on their history. They actually want a customized premium. And that creates internal challenges with insurers about how they actually model risk. So what we've done is we're using our point-of-quote infrastructure with the insurance marketplace, and we're bringing driving scores through that infrastructure much like any other data point that we currently serve up to insurers globally. It's quite simple. We add it on as an additional attribute. We already have the plumbing in place. So at the highest level, here's what the exchange data flow looks like. We're getting data coming in from many brands into our infrastructure, and then we make it available at point of quote, enabling the customers to choose at point of quote whether they consent to use their data as part of the quotation or not, and then whether they consent to use the data further on in the insurance continuum, i.e. at point of claim. So solving the many-to-many problem from the insurer side, we've come up with the concept of an insurance panel. And this is a traditional broking concept. We're currently talking to European insurers in each market territory, because in each market in Europe, the insurance distribution is actually quite different and consumer appetite is quite different. So we're setting up panels of insurers in each European market, and those insurers are a group which will integrate at point of quote with our platform, and we're able to serve up driving scores to them, or we're able to replicate the driving scores that they've already got in place in their aftermarket programs, because we can run their customized scores. So we integrate these insurance panel with our platform, we normalize, we clean, scrub the data, and we serve it up to them. We think that in the short term, our program will sit alongside their aftermarket programs, but it will give them access to many OEMs rather than have to go through the IT exercise of integrating with each one. So it's a fairly simple concept. The benefits of the exchange, well, for vehicle manufacturers, they need to effectively generate new revenue lines to pay for this technology. And the insurance is a good use case. There are many other use cases that they can use to raise revenue, but the insurance has got to be top of the pile. It also gives them access to the whole insurance market. So a vehicle manufacturer's business is not running multiple relationships and having massive legal teams that can do deals with individual insurers. It streamlines the ability to get their drivers' data out into the marketplace, giving the customers the choice as to whether they use it or not. For consumers, I really do believe from our surveys that they're ready to trade this personal data. It's not going to be for everyone, but the higher the premium you pay, the much more likely we've found that you're going to shop your data for a better premium. It gives them much greater choice, and also for consumers, an OEM program through an exchange is frictionless. They don't have to have an engineer visit their vehicle and install an aftermarket device. They don't have to download an app. They don't have to do anything. All they have to do is consent at point of quote to use their vehicle data from our cloud in the insurance process, in the insurance quotation. So it's frictionless for them, and consumers have proven in other use cases that they like frictionless processes. And for the insurers, this is an important new data point. A lot of insurers have already invested in aftermarket programs to understand the value of a driving score and what it does for giving them rating uplift, and what it does for their claims processes. And they're already ahead of the curve because of those programs. But for many insurers, it allows them to catch up and to learn as well. Now, there is going to be some questions, or we've already been challenged by a lot of insurers about where's my competitive advantage if I'm just buying the same driving score that everyone else gets access to. But the key is, for the insurers, it's how they use that in their internal processes, how they use that for their segmentation, and how they use it in their rating, how they use it in their underwriting. And that's going to be unique to every single insurer, how they use that data point. In the States, LexisNexis works with all 300 carriers in the US. And what we serve up a credit score to them. And that credit score is very similar for all 300 carriers. But you'd be amazed at how differently each carrier uses that same piece of information when it comes to coming up with a risk. So their intellectual property that they're going to build up is not necessarily in the mechanism of running these programs to get the data in. It's how they use the data in underwriting. So this is an important aspect for insurers. So I guess I tried to keep this to time. If you're an insurer out there and you'd like to learn more from us, we have a booth, and I have a team here, and we'd love to talk to you. If you're an OEM out there and you aren't talking to us, please come and have a talk to us and learn more about what we're doing with the data exchange. Thanks very much for your time.
You've outdone yourself on your promise, and you actually have plenty of time for questions, and there are a few that have come in. Are you happy to take them?
Oh dear, yeah, I should have rambled on a little bit more.
So you've got a couple questions directly about the product and a couple more around the market. I think the most voted one is, we see many exchange platforms. What is LexisNexis data exchange platform? What is your competitive advantage against others, essentially?
We've got a long-run view of the investment it's going to take to build an exchange. We don't require funding for this. We're a very well-funded business, and we've got a very long-run view. We don't need to monetize this anytime soon. It's a 7-year plan for us. So we've got a very long-run view, and also we already own the last mile infrastructure into the insurers' platforms already. we serve up data through those pipes already for credit, no claims bonus, historical claims and convictions. We already sell a lot of data points at point of quote and point of claim to insurers. So I think we're going to really leverage that existing last mile plumbing and that infrastructure. And that's what will make our exchange bite faster when the data starts to come through. Does that make sense? We have the plumbing and we've got the money.
Great. That was also question number 3. But question number 2, would car sharing business models, could they be a barrier to higher penetration rates?
No, I don't think so. I think car sharing is going to require data for that ecosystem to work. And we're not just going to take driving behavior data from vehicles, we're going to take ADAS data, and we're going to take utilization data. And that's going to be, that utilization data is going to be important for car sharing. I'm a big champion of car sharing. I think we've heard messages from other speakers today how underutilized the assets of our cars are going to be. And I said to my son the other day, you know, it's possible that when you start driving, you won't own the car. You know, you will learn on the family's car, and then, you know, you will share a car. But I think that to run those car sharing ecosystems, you need data from the vehicle. You know, to understand liability from a vehicle that's driven in autonomous mode and non-autonomous mode, you need to know which mode it was on at that particular time. You need data out of the vehicle. And I think that it's another many-to-many problem. Car sharing networks are not going to be just specific to one OEM. People will want choice of brand in car sharing ecosystems. So it's the same thing. I think we're going to need data from the platform. I don't think it's going to cannibalize it.
Okay, now you've time for a couple more, and another one just came in. Oh, they're moving. One of them got moved up. Anonymous has asked the question of which automakers are contributing.
Well, at the moment, we've got a live pilot in play in the US with Mitsubishi. And we're doing 6 proof of concepts. We launched our platform today, okay? So I think by the time I come back and give you guys an update at the conference next year, I will be able to release more of those OEM brand names as they go from proof of concept into production. So we've got good traction at the moment. And what I'm excited to say is that when I talk to OEMs, I was worried about the maturity of their connected car programs, but actually they're a lot further ahead than I thought they would be, and that really surprised me, and it's really exciting, actually. So I actually believe those connectivity statistics in 2025. I really do think it's going to be 70%.
Thank you. So I'm going to rephrase one that's just been voted up. So they're talking about how someone they know refused UBI because it isn't flexible enough. Now, do you feel that it could be or will be made more flexible?
I think so. The reason why some of the products are inflexible is because they're specific to a certain segment in the market. And what happens, so a young driver, and then that young driver ages out of that segment and finds that they don't want to have their speed monitored and they don't want to be penalized for overspeeding. Maybe that's less critical as they get more driving experience and we don't need to treat them that way. Now, the reason why these products are quite specific at the moment and restrictive is because they're targeted at very specific segments that pay high premiums because of the cost of aftermarket data. We get connected car data coming through at a much lower cost, and we will find that UBI, usage-based insurance products, completely change. They won't all look like the young driver products that we've got in the marketplace. That doesn't define UBI. It would just be a normal product that you're buying from Generali, but it will have UBI on it. Yeah? And you'll get a discount because you're prepared to be monitored. So Generali gets the benefit of the self-selection. And then at point of claim, your claim is paid faster because they can process the accident sooner. But there won't be a driving score. You won't be given an update. You won't be told that you were speeding on the, on the Autobahn. Oh, no, you can't speed on the Autobahn. Bad example. But, at the moment, UBI can't be defined at the moment by inflexible starter products for young drivers. Yeah, it's as the cost of the data comes down, they're going to get look a lot more like just normal insurance.
Great, thank you very much, and to perfect time.